Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been America's foremost precious metals brokerage firm since 1972, helping you build a strategic precious metals portfolio. Call 800-525-9556 to buy gold, silver, platinum, or palladium today, or go to McIlvaney.com.
Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, the news that moves the markets. And once again, becoming a regular treat here, I've got Rob McLaughlin, one of our longtime advisors here at McIlvaney ICA, joining me in the studio. We are going to have a slightly more in-depth talk on something that I brought up a couple weeks ago that I do think is kind of going to become the theme in a lot of the metals discussion, and that's what does gold do in a rising interest rate environment? So, Rob, a couple days ago, you asked me to put a little chart together because we wanted to have a conversation to see how do we discuss this? And I think that's what we're going to do today. We're not coming with answers. We're coming with questions that we want our listeners to participate in and help us with and discuss along with us. So, Rob, how do we answer that question?
Well, there are people on the internet who are claiming that over the last 50 years, the Fed has raised rates 7 times and silver has gone up 7 times, 100% of the time. And when you and I were talking, I asked you, make me a silver and discount rate chart, and let's see if that pans out. And I'm not seeing what people are being told from other advisors, because I know in the years that I've been here, everybody's looking for the catalyst that's going to send metals higher. But interest rates and Fed policy have a lot to do with our market. I think that if we go back to the 70s and early 80s under Paul Volcker, he was absolutely committed to shutting down the inflation, and he relentlessly raised interest rates. He was committed. Greenspan, coming along later, was somewhat committed.
For a time.
I mean, there's a difference between the chicken and the pig when it comes to breakfast. You know, the chicken's involved and the pig is committed. Volcker was committed. Greenspan, not so much. He had a plan until he got hit in the mouth.
Right. By the real estate market at that time.
Yeah.
You know, what happened in real estate. And that takes me back to when I was in banking before I came to work here. I wasn't even on the lending side. I was writing 3 to 5 home equity loans a day in southern Florida, where I used to live and work. And the real estate market was out of control. A fair bit of that was trying to be curbed by those interest rate rises. And then we saw what happened when the real estate market started to dissolve and collapse. And I think that's what you're talking about, right? You know, He wasn't committed to the rises because the second the market fell out from under him, it full reversed.
Rates plummeted.
Right.
Right.
So what did silver do when Volcker was raising interest rates? What did silver do when Greenspan was raising interest rates? And how can we look at that going forward with Jay Powell?
Well, I'm looking at the chart, and you look at it with me. You do see silver rising under that relentless pressure of the Fed. And then Greenspan raised rates, and silver didn't do anything. It just went sideways. So there was absolutely no correlation under Greenspan. Now, we do see early 2000 through about 2007, interest rates rising, silver rising, and then interest rates just plummeted. Silver initially contracted, and then it went sky high.
Yeah, almost like some event happened in 2008 that caused them to panic.
Exactly.
I wonder what that was. And silver kept going higher after an initial correction. It really went to the old highs in the high 40s, almost 50. And here lately, we've seen interest rates rising. Silver really did not respond to rising interest rates. And then, of course, here a year ago, we saw interest rates absolutely collapse and silver shot up. So I think that if our clients are hearing talk about 100% correlation of the Fed raising interest rates and silver going higher, I don't think you can make that case. I really don't. Right.
Not that I don't want silver to go up. I think silver is overdue for a rally. In fact, it wouldn't surprise me. I'd be curious what the charts say. But I'm thinking that we are going to see silver in the low to mid 30s at some point this year. What does the chart say?
I think one of the keys to talking about this, and one of the reasons why we're looking at this so heavily, is you can take a look at this 40, 50-year chart, and you can see that there are some correlations, not perfect, but there are some correlations to interest rate rises or falls and the increase in the value of metals, the dollar price cost of metals. And my big fear being in this industry is coming across as a snake oil salesman. Interest rate goes up, gold's going up. If interest rates are going down, gold's going up. If inflation's up, gold's up. If inflation's down, gold's up. If you're awake, gold's up. If you're asleep, gold's up. I don't want to be that person, but there are correlations here, and I think that's what you and I are trying to dig through and find is what causes the correlation to happen and what doesn't. And for me, what I think the key here is the market sentiment, is the reason behind the event occurring. And I think that's why important to look at Paul Volcker versus Greenspan versus Jay Powell. What is their level of commitment to their plan? Because in the 80s, when you have these interest rate rises, you've got people who are suffering on the borrowing side, who are taking car loans out at 16% and home loans out at 12%. And tightening of the wallet and increasing of expenses, or at least debt-driven expenses. So you have a fear and a panic, and you have some movement into hard assets as a preservation hedge. Similar to what you saw, say, at the end of the Greenspan rally, where you had the real estate market crash, and that did cause gold and silver to start rising. And then a few years later, it culminated with the 2008 stock market crash. Mm-hmm. So I think the underlying story here as to why we see gold do very well in times of inflation and low interest rates, but we also can see gold and silver do very well during times of deflation is what caused the deflation or what caused the interest rate decline. Healthy markets, interest rate going down because markets are strong, interest rates going up because markets are strong. You don't need to see a rise or a fall in the gold price because there's not that relative fear coming out of some of these other markets. But if you do have an underlying market concern, I think that's when you do see the precious metals rise.
Well, and gold is really an asset that doesn't need inflation or deflation. In fact, if anything, we're coming out of a deflationary cycle very rapidly going into inflation. During Janet Yellen's term, inflation was really tame. And into Jay Powell's term, inflation was very tame. The dollar was strong. Gas prices came down. The wealth effect on Wall Street was taking place. And yet gold did well. Gold was very strong. There was a growing sentiment in our investors in terms of buying gold. They weren't buying it because they were trying to increase wealth. They were starting to allocate to gold because they thought that the country was moving in a direction that they were concerned about. The debt was becoming a concern. Now there are blaring warning signs with the debt and the overextension. It's full bore now. As opposed to Wall Street doesn't consider gold to be a viable asset unless it is increasing in value. And last year was a classic year where we saw a huge amount of orders in a declining gold and silver market. Our people weren't buying to chase the price. They were buying to up their percentage. But silver is very vulnerable to inflation. Gold, not so much.
Right, and that's a very different motivation.
Very.
Okay, so what is happening with the anticipation of Jay Powell beginning to raise interest rates in March, which I agree with you, and I think we're both in agreement with Dave McAlvany. We think that is going to happen.
Yes.
So we do not think this is smoke and mirrors. We think they have every intention of beginning to raise interest rates. So how has gold responded as the market is starting to accept the fact that this may be our new paradigm, our new reality going forward? Well, I can tell you as a chart guy, if I didn't know that Jay Powell spoke last week, I wouldn't know that he made his second threat for March interest rate rises. And even though gold took an $80 drop in response to that, if you look at just the last 6 months worth of gold pricing, gold has been on a tear, climbing up. It came right into the top end of its compression range. We knew we would get a turnaround back down. We did call for that a couple weeks ago. Just so happened it occurred on the exact day that Jay Powell spoke. It's almost like this stuff gets planned out in advance. And we took an $80 drop, a very minimal drop, down to the 618 Fibonacci level, short-term fib level. Lo and behold, bounced and came right back up. So we're back up to above 1,800 now.
Yeah.
It does not surprise me at all that this happened in the market, and the fact that we had a Fed announcement last week, from my perspective, has nothing to do with what the price of gold moved, because it stayed within very reasonable charting parameters. So I think the market expects interest rates to go up too. I don't think this was a shock. I think what we saw happen was exactly what would have happened anyway had he not spoken last week.
Well, explain to me the drop in the value of the dollar then. If they're anticipating rising interest rates, why did the dollar not hold the levels that it was at last week?
Wouldn't it kind of be the same answer? Nobody believes that the dollar's going to be stronger. I mean, the first, what did he say? It's a two-step plan.
Yeah.
Step one, raise interest rates. And if that works, step two will be decrease the Fed's balance sheet.
Right.
That's a step one, step two. And step two could be 6 or 9 or 12 months later, if at all. So I don't think there's any anticipation that they're going to start backing off of Fed purchasing. In fact, there's no reason they couldn't increase Fed purchasing, regardless of interest rates going up, just to try to stabilize the economy short term. Why would the dollar increase in value on that? So you have a little bit of a bump up in the value of the U.S. dollar, and like you just pointed out, it turned around and came right back down because that's the direction it's going long term.
Where do you see it settling here near term in the next 3 months?
Ultimately, it did make a higher high, going back to kind of the ceiling we put in back in November, December. So unless we look at least down to the 94-ish range, pushing back down another 2 points from where we're at now, dollar technically could continue to climb. You've got a very strong ceiling at around 97.7 on the dollar index that we did not get to on this last move. So we could see it take another little step up. But ultimately, if we're looking at continued dollar decline, I would say, like you asked, 3 to 6 months. I mean, somewhere in the 93 to 94 range would be a very reasonable target, possibly down to between 91 and 92.
Wow.
Which is right before, going back to September of last year, before we really had kind of a breakout move up. We went from 92 to almost 97 now in a short period of time. So you definitely could give up that growth pretty quickly. And we're still well above the previous lows, the 2021 lows down sub 90. So that still keeps us above those long-term lows in a short period of time. But ultimately, if we go down from here, we will get below that. I just don't know when. 6 months, 12 months, 18 months. You know, the longer the time frame, the more likely something is going to happen.
So our guess is that silver is going higher in the near term. My guess is that we will see somewhere in the $30 range for silver before summer. And I'm not sure about gold. I think we're comfortable where we are in this 1760, 1840 channel. Unless something happens and gold breaks above 1866, I have a hard time reading gold, and I'm usually the other way around. I'm usually very confident in what I think gold's going to do and less confident in silver, but it does seem to me that silver is going to get some momentum.
Right. Well, and the ratio would certainly agree with you, just the price ratio between gold and silver.
Yeah.
You know, my big concern is what if people are so fixated on gold versus interest rates versus dollar
Right.
up or down,
Right.
and we completely forget that the equities market has completely fallen off the cliff.
Yeah.
And we're having what could be a dead cat bounce right now in anticipation of continued decline in a rising interest rate environment, which is completely reasonable.
Right.
There's no reason you don't see the dollar index and gold and silver increasing at the same time,
Right.
because we have multiple markets here we're working with. It's not always a flip of a coin.
Right.
It's a multi-sided dice. And sometimes you have a couple faces up and a couple faces down, and the equities market looks very weak, rollover-ish to me. Rollovery?
Yeah.
Can I call it
I
rollovery?
think
Is
you
that a
can
new
call
word?
it rollover.
Okay.
So tell me about gold. Where are we? It seems to me we're dead center between support and resistance. What are the long-term moving averages looking like from here?
I would argue we're definitely closer to resistance than support. You know,
Okay.
we're definitely higher up. You look at the long-term support, it's all the way down at 1680 because we've hit that number a couple times.
Right.
But short-term, if you just look at the short-term channel we made starting back in September, October, and then growing up from there, that would be short-term support around 1780, which is not too far below where we're at right now. And then your falling ceiling, that resistance is now moved to around 1830. So it's a pretty tight range
Very
short term.
Very tight.
But again, we could break out of that to the downside, and you've got a long way to go till you hit 1680. But anything above that, if we break out of this pennant pattern and we put in a higher high, higher than the November highs we saw back at around 1880 last year, it's not a long walk to get to 1900, and then it's a real quick trip to 2000, and now we're at 2100, and we've broken above the all-time highs we put in 2020, and we're on our way up to whatever the next high is going to be, 2800, 3200, 3500, and then we'll start the cycle over again.
You actually think this little sleepy doldrums that we're in is misleading.
Well, and again, from my perspective, from purely a charting perspective, let's pretend I don't have CNN because I don't have cable. I just look at this from the raw numbers, and I don't see any news event that's taken place in the last 2 weeks. I don't see it on the charts. Charts did exactly what they should have done. They hit a resistance level. They've pulled back a small portion of that, and they're still closer to the top end than the bottom.
It's going to be fun.
It is going to be a fun ride. I don't know if we're looking at another 2020. 2020 was very emotionally driven.
Yes.
The price move up in gold. I think we're looking at something a little bit more math-oriented, mathematical.
Okay.
Unless the interest rate rises cause a catastrophe in the equities market. I think people are pricing it in already.
I think they're expecting it.
Right. I think it's getting priced in.
Yes.
I think the bulk of the damage has been done, at least for what happens in March. What happens in June? What happens in September? What happens in December? What does this end up looking like over the next 18 months?
And how much of that depends on the midterms?
Right. So we'll have to do this again next month and to see how wrong we were in our predictions. But yeah, I appreciate you coming in and joining again. I know Robert and Tori were missed today, unable to join us, but thanks for stepping up like you do. It's been a fun discussion. We'll keep having it. If you want to have that discussion with Rob and I, give us a call. We don't know all the answers. We're wading through this just like you are. I think that's important to remember. We don't know the future. We don't know the answers. You know, the old quote, history doesn't repeat, but it sure rhymes, I think plays into effect here. You do want to look at how markets have moved in the past. That'll at least give you a general idea which way to start walking. And primarily, we don't have to be experts in picking the perfect thing at the perfect time. It's not how our investment strategy works. So that's going to do it this week for Golden Rule Radio. As always, appreciate you stopping by. If you've got anything to add, give us a call at 800-525-9556. Click the subscribe button, ring the bell, join us in the comments if you've got any questions. You can find more info on our website at McElvaney.com, Facebook at McElvaney Financial, or on Twitter at ICA Gold.
Until next time, Miles.
Have a great week.